Boom, alright, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Waves Weekly, a series I used to post every Saturday where we cover recent news and current events that I believe will impact the markets. Unfortunately, a few months back, I did decide that I would start taking a day off from posting YouTube videos. I decided Saturday was going to be that day, but I didn't have anything going on this morning, so I figured record a good old-fashioned Waves Weekly for the Waves family. So, cheers to the weekend, you guys. I am currently drinking Super Coffee Protein MCT Oil. Vanilla flavor. This stuff will get you wired, especially if you break a fast with it like I am right now. But cheers, you guys. Cheers for old time's sake. Please let me know down in the comments below what you are drinking this weekend. And also let me know if you were around for the original Waves Weekly era, if you were part of the family for when we would do the actual waves on a weekly basis, okay? So, always making waves. Again, I do want to try to bring this series back whenever I have time because they're just fun to make. So, again, you guys, cheers to the weekend. Let's get into it. As always, we'll quickly go over each topic we're going to be discussing, and then we'll dive into each one individually. In front of us, TradingView, where we will be spending surprisingly little time today. You guys, we've been talking so much about technicals, so that is another reason why I'm very excited to record this. I like reading through articles, giving you guys my general thoughts from a fundamental perspective on the market. So, not going to be spending too much time here today. I will say that Bitcoin looks like it's printing just another bear flag, so that's going to be interesting to see how tomorrow plays out. Again, it is Saturday, and I will record a stock watch tomorrow covering Bitcoin, covering the SPX, covering the S&P, and talk to you guys about what I feel will happen in the week ahead. And I also have some articles lined up for tomorrow's Sunday stock watch as well. But again, we're not really going to be spending time on the charts. I just wanted to preface the video with that. I always like it as a backdrop for the intro. But in terms of news, we are going to be focusing pretty much this entire Waves Weekly, which I obviously titled the video with, around the potential tax hike. And I want to make it very clear right off the bat, you guys, I do not believe that this current tax plan will be implemented in its current fashion. I do believe that over the course of the coming years, I do believe there will definitely be a tax hike initiated to the more wealthy segment of the market, of just the population. But I do not think that this specific tax plan will be implemented anytime in the near future. I do think this is kind of a shock value piece, but I do think it's also a good thought experiment, and I want to give you guys my thoughts around how a potential hike in taxes would affect the markets, okay? So we'll kick it off with this. Bloomberg market stocks drop on Biden plan to lift capital gains tax. So we'll just quickly go over this article, you guys, read a few key points here, quickly obtain an understanding of what this tax plan is from a general perspective, and then I want to jump into this article where we will cover the thoughts of way more competent individuals than myself on the matter. And I again, you guys, this applies to so many things in life. The more perspectives you can get, especially if they're perspectives from competent veteran individuals, the better, and they will help you. Of course, you guys, always make your own decisions, always establish your own thoughts and thought patterns, but it's good to take certain thoughts from others, especially once again if they're competent in the space. So CNBC, cryptocurrencies fall on possible Biden capital gains tax hike. Kramer, Draper, and others react. So we'll quickly go over this, you guys. Again, just get some perspectives. I like each one of these, and I do think that they each have something to offer. So we'll read through these, and I will give you guys some of my thoughts on some of these guys' thoughts. Okay, so we'll go through that. We will then move into rich Americans who were warned on taxes, hunt for ways around them. So I don't really want to talk much about this. I think this was just kind of an interesting headline. We'll read a few quick little paragraphs right here just to kind of preface. I more wanted to use this as a segue to talk about my content of the week, which is going to be the All In podcast. So the All In guys, again, you guys, I've recommended these guys. If you're part of the Discord, if you're part of the newsletter, I've recommended these guys since they started making these for very, very highly competent individuals. If you are involved in the markets in any way, shape, or form, I think it's very, very important that you listen to these podcasts. It's like Chamath Palihapitiya, he's like the founder of SPACs. He pretty much created SPACs, which obviously many of you know have run the market over the course of 2020, 2021. Jason Calacanis, he's the host. He's a very prominent angel investor. Two Davids, both very, very smart individuals. It's a very, very diverse yet very accomplished group of people in the investment space, and I think their takes on some of these more macro fundamental issues are very, very important, and I view these guys as mentors personally. So this is going to be my content. And I thought they had a very, very interesting take on how this could affect the markets. And I do want you guys to watch this. Even if you guys tune out right now, go watch these guys talk, because their take on how this tax plan could potentially affect the markets from both a fundamental economic and psychological, most importantly psychological perspective, especially amongst the mega wealthy, could have a negative impact on the markets. Okay, so again, you guys check this out, whether it's right now, whether it's after the video. I mean, I'd appreciate it if it's after the video, but if you want to do it right now, maybe come back after. That's sick, but that is my content. And again, I just want to use this Rich Americans thing to, like, this little article. It is interesting, but I did want to use it to segue into this. Okay, so before we do dive into the articles, I will ask you guys, as always, to please give the video a like if you do go on to gain value from it today, or if you're stoked for Waves Weeklies being back for the first time in months. Subscribe to the channel if you're new around here and want to catch more content like this, hopefully on at least a buy or try weekly basis. And of course, subscribe to check out the complete daily. Okay, so the reason I'm tripping over that is because I wanted to mention this first and I forgot to, and I just realized I did. So before I do any plug for the newsletter, I want to talk to my existing subscribers. I've been getting so many emails. It's been so hard for me to keep up about students who are subscribed to the newsletter not receiving emails for the past few days, and this sucks for me. I hate to hear this. I've been getting back to as many of you as I can. I've been in the Discord. I've been trying to make announcements, but you guys, Teachable has just initiated a new rule to where you have to manually allow promotional emails in your Teachable account. Okay, so when I send out the newsletter, that is considered a promotional email, I guess, which kind of sucks, but that's how it is. Regardless, go into your Teachable settings, edit profile, and you have to check this box right here that's circled in red. I agree to receive instructional and promotional emails from it's not going to say the Sweet Shop. This is just the example, but you need to make sure that box is checked, guys. Also, please make sure they're not going to your spam folder. And again, it bums me out so much. I hate when stuff like this happens, but I did need to address it, and I felt it was very important to address it for the current Waves family, for the current subscribers. So again, keep that in mind. And if you do want to join the newsletter, if you do want the complete portfolio updated daily, I do send out the newsletter daily during market hours. Don't even really want to plug this right now, to be honest. First link down in the description, $15 a month. It means a lot if you check it out. If not, no worries at all. Let's get into kind of these charts. So again, I'll go over the S&P. I will say right now, the SPX, pretty much all equity indices, I am bullish on going into next week. They all set like new all-time highs as we close the market on Friday, even after Thursday's scare from this tax plan that we're going to be talking about right now. BTC and ETH, BTC is looking promising in the sense that it does look like it wants to reassert some dominance, but I'm seeing a very, very textbook bear flag right here. You guys, the same exact thing that played out right here. Looks like it's playing out right here. We have not yet tested support, so it will be interesting to see if that plays out tomorrow. Again, I will cover BTC, of course, in tomorrow's Sunday Stock Watch, along with a few other things. Take a look at the SPX as well. But today, I just want to give you guys a few of my thoughts. The dollar is looking very, very not strong. The dollar actually looks terrible. We can look at the dollar tomorrow too. And we're definitely not going to be covering Ryan's stuff. But there are a few other stocks that I'm definitely keeping an eye on. Silver, gold are not looking too good right now. Doji popping off. We will be covering a little bit of Doge here. And again, you guys, the markets are crazy right now. And the fundamentals are pretty crazy right now too. And again, you guys, it's so unlikely to me that this isn't just kind of a proposition. Like, I have very, very little confidence in the fact that this exact plan will pass. But again, thought experiments. So federal tax rates for rich investors could be as high as 43.4%. That is extremely high. Intel reports slump in data center sales, gross margins fall. U.S. stocks had their biggest slide in 5 weeks after President Joe Biden was said to propose almost doubling the capital gains tax for the wealthy. The dollar advanced. That quickly reversed. The S&P 500 turned lower after Bloomberg News reported that those earning $1 million or more, the new top rate, coupled with an existing surtax on investment income, means that federal tax for the rich investors could be as high as 43.4%. That's so ridiculously high. Speculation arose that some traders may sell shares before any change is made to capture the lower rate. Sticker shock over some of those tax figures will be hard to shake off for some investors. Edward Moya, senior market analyst at Oanda, wrote in a note, some traders are looking for an excuse to lock in profits, and they might choose this tax story as their catalyst. So, I kind of like that. I do like that. Again, you guys, this is so psychological. You have to understand that when this happened, this is just shock. This is a shock piece. Obviously, it came from President Biden, which makes it not just a shock piece. Obviously, his words will hold weight. But will this get through Congress? Very, very, very likely not. There's so many hoops that this would have to jump through to actually be passed, and I don't think that's going to happen, which kind of comes in line with many of these individuals' opinions. So let's get into this. Cracks are forming in the cryptocurrency space. The overall crypto market lost more than $200 billion in Friday's trading sessions after reports surfaced that President Joe Biden would seek to raise capital gains taxes on millionaire investors to fund other policy initiatives. Market analysts were largely split on the move's impact. Here's how 5 of them, including CNBC's Jim Cramer, reacted. Tim Draper, founder and managing partner of Draper Associates, big Bitcoin guy, huge Bitcoin guy, Tim Draper, raised concerns about productivity. And I quote, I just think, what are they thinking? Because actually, higher taxes tend to lower revenue. So right now, they need a lot of revenue. They're printing money. And if you bring in higher taxes, it lowers the motivation of the people. If you're working towards some goal, your startup, and you're saying, I'm going to build something of great value, and then you realize the government takes more than half of it, you're working through July before you even have started work for yourself, and that motivation starts to dwindle. That is kind of the premier point that the All In Boys talked about as well. Like, it lowers motivation. If you tax people more, and if you're giving taxes to the government, who are notoriously terrible capital allocators of taxes, of wealth, that makes it even less important. I heard, shout out to the Group Chat Boys, another great podcast I listened to. This was their idea. Like, have Bezos, have Gates, like, make this an almost philanthropic effort, and have the most accomplished, seasoned entrepreneurs in our world, literally Bezos, Gates, Musk, have them tackle the problem of wealth inequality, of making things more fair, and of solving like the wealth inequality, the wealth gap, again, which is kind of what this tax plan is aimed at, is just leveling the playing field a bit. And I don't think taxing the ultra wealthy is the solution to that. Okay, so again, this is just all a thought experiment, guys. This was meant to be more of a fun one, and please let me know down below. I would love to be chopping it up with some of you guys instead of just talking to myself, but I am talking to you guys. So please let me know in the comments down below if you were to try to solve just and this is a very, very blanket issue, but like the wealth gap, wealth inequality from a general perspective, just throw out some ideas, just throw some ideas out there. Let me know what you think, and I would love to see some of your guys' thoughts around this. Okay, so Blair Efron, partner and co-founder of Centerview Partners, advised waiting to see Biden's tax package in its final form. Yeah, again, you have to wait for the final form. This is by no means its final form. I think we ought to step back and see how the overall tax package comes together. You obviously have a 50-50 Senate. I think there's going to be a lot of negotiation back and forth. The administration's already indicated that. The Republicans came out Thursday with a $600 billion infrastructure package. We would assume that the overall number, when we're done, both in terms of the infrastructure, will be lower, and in terms of how to pay for it, and taxes will be lower as well. Cramer, host of CNBC's Mad Money, good old Jimmy, wasn't too worried about the markets, and I quote, "This does not affect the companies. I'm not Warren Buffett and never will be. Can't pretend. But the companies are what we need to worry about, and companies are not impacted by raising capital gains for 3% of people." So this is another thing, you guys, as well. Is, do you just tax, like, even like I saw some like some stuff, some ideas bounced around of like 400K. Like, this tax plan would affect your average Joe, or even your like kind of like higher end average Joe, more than many companies. So I do think that you could argue like the intricacies of corporate taxes and stuff, and like should Amazon pay taxes for the overall value, for the net value that they're providing the world? Do they actually owe a lot of taxes? So there's, again, you guys, there's so many like gray areas in this argument that you have to be considerate about. But again, that's why it's a thought experiment, and it's just fun to kind of think through this and, again, establish your own opinion around it ultimately. So Nassim Nicholas Taleb, clown, because this guy just called, look up this guy's name, Black Swan, author of Black Swan, just called Bitcoin a Ponzi scheme. What a boomer. What a boomer at heart. I know there's some old individuals watching, you guys. It's all in here, okay? So age is just a number, but this guy is a boomer at heart and mind, okay? Distinguished scientific advisor at Universal Investments said tax hikes could be more neutralizing than intended. And I quote, "A lot of these tax gains or attempts to raise revenue by governments are naive. There's effectively sometimes a neutral effect that you raise a tax rate and the revenue stays the same. As far as market risk and stuff like that, I think it's rather neutral. We already have problems outside tax changes. We have problems in the markets. We're sitting on dynamite. We don't know if it'll take 30 years or 2 months before we feel the effects." I agree with that. Although this guy is a little behind on Bitcoin, this is a good thought. Okay, so he's right in the sense that we are sitting in probably the most unprecedented, the most volatile, the craziest, I'm not going to say bubble, but just it's hot. We're in a hot market right now. I always say that, you guys, there's capital flying everywhere. There's so much capital. There's so much wealth that has been created over this past year that just wants to work. There's more retail than ever. The market's hot. And because nothing like this has ever happened before, this was truly Black Swan, which with COVID and just how the market's played out over the past year, that we don't know how this is going to play out. Whether it happens fast, things are happening faster than ever, which is something that's very, very important to keep in mind. Like, things are happening at the snap of a finger. So as I always say in the newsletter and stuff, you guys, stay on your toes. You have to stay on your toes. Things can just flip at the flip of a coin, okay? But again, you guys, just stay sharp out there, and yeah, just be careful, because we are in a hot market. So that's the takeaway from that one, I guess. So Ryan Selkis, CEO of crypto data company Messari, pointed to one of the pointed to one corner of the crypto market where investors could hide out. And I quote, and we'll close it out here: "For better or for worse, when you look at these cycles historically, everything rises at the same pace. And when the tide goes out, you start to see which assets actually have some long-term investing fundamentals." So I think as we look around the asset classes, Bitcoin, Ether, obviously your bellwethers. If you think about capital gains issue, one of the unintended consequences might be that more capital is locked in this crypto ecosystem long-term and medium-term. And ultimately, that's going to be the benefit of this new entire class of assets. They're referred to as DeFi assets, essentially being able to borrow against existing crypto holdings rather than sell them and trigger a taxable offense. You might have structurally higher interest rates. You might have better tax setups to invest in those assets and those protocols in the ecosystem versus taking money out of the equation. So that's a great point, you guys. And this is where, like, our sponsor BlockFi, I wasn't even going to shout out the sponsor BlockFi, but I freaking love BlockFi. I'm a user, and they're a partner of the Waves fam. So BlockFi.com/Royce, if you put your crypto to work, like put Bitcoin in, it's an interest account. And that's kind of what he's saying. When you lend your crypto out, keep your crypto in a lending account like BlockFi, you earn interest on it. So I think Bitcoin is like 6.4% or something like that. So you earn the appreciation of the asset, even if whether Bitcoin goes up or down, your investment is earning a significant amount of interest. So at least 6% per year. And as that accumulates, that's the beauty of compounding, you guys. That's the beauty of interest. Even if it's 6%, even though we cover so many, like, we're going for multiples here. We go for home runs on this channel. Many of you guys know that. We cover revolutionary sectors, which are more likely to deliver those kind of home run plays. 6% on an asset like Bitcoin. Again, like, I'm long, like maybe lifelong on Bitcoin. I don't know if I'm going to sell the majority of my Bitcoin position, like, ever, to be completely honest. But I feel good having it in BlockFi, where even if it's going down, like at a time like now over the past few days, I'm for two reasons. I'm not really fretting because I'm so long-term bullish. I do believe Bitcoin will easily be six figures at some point in the future. But I also know that my Bitcoin is earning interest for me. And that's kind of what this guy's saying with the lending. So again, didn't mean to shout him out, but BlockFi.com/Royce. I'll throw that down in the description. You get a $250 crypto, up to a $250 crypto bonus. I think you got to deposit like 10K or something in there. But you do get some free crypto if you sign up through that link and deposit. And again, even in the bad times, you are having your crypto work for you. And this guy's point about that keeping money in the ecosystem, the beauty of just kind of that structure, like crypto is such like a pioneering space, and it's still so early, you guys. So super exciting times here. And again, I do think that we just have to stay on our toes because, again, this is a crazy market environment. And again, I do want to make it clear as we close it out with this one that I don't think like this 50% tax is going to come into play anytime soon. Maybe over the coming years, like a 30%, like, I mean, it's already kind of close to 30, I guess, like 35, maybe 40 tops % tax could come into play. But there's going to be so many hoops that this plan will jump through. This is such a polarizing issue. And again, it's also kind of a very good look at how polarized the country is. But like, again, just from perspective of thoughts, like it's so hard to find a group of people. Like if you throw a bunch of people in a room, to have them agree on most things is so rare in 2021. And but again, that's the beauty of like YouTube. That's the beauty of the Waves family, is although we don't agree with everything, the fundamentals are there, the moral principles are there. And again, I really want you guys to, like, this is kind of a community experiment as well. Please let me know down below what you guys think about all of this stuff. And again, I'm not going to act like I'm super educated on this. These are literally just my thoughts. I'm not saying anything I'm saying is going to be right or wrong. But again, just a fun thought experiment. Let me know down below what you think. So as Joe Biden and state lawmakers target millionaires and billionaires, wealth advisors are trying to help their clients adapt to the new rules. For wealthy Americans worried about higher taxes, the future is looking bleaker. It's all but inevitable that the Biden administration, as well as lawmakers at the state level, will target millionaires and billionaires for more levies. The new reality could feel harsh for investors who got used to paying a top rate of 23.8% on their capital gains, an amount they can lower further with many of the deductions, incentives, and accounting tricks offered by the U.S. tax code. Advisors, of course, will certainly try to help their clients adapt to whatever the new rules may be. So again, you guys, this kind of comes into play. And keep in mind, whales still run the market. And that's kind of what these guys were talking about. Because these guys are rich. Like, these guys are billionaires, okay? So what these guys say they will do holds weight. Like, I put weight on, because their thoughts likely resonate amongst more of the ultra mega wealthy, who, again, the whales make the waves in the markets, okay? The whales make the waves, okay? So they were talking about how like the incentive structure, kind of what Tim Draper said in this article right here. people become less incentivized to do work and put their capital to work if you're taxed more. Again, like that, like you said, like if you're taxed 50%, you're working halfway through the year. You're working 6 months out of the year before you like to break even, before you're paying yourself at all. And that is terrible for business. That's terrible for productivity. And again, it's my issue with this. And again, you can argue this. The government is the U.S. government from an international level, even like a state level, I guess you could say. Like obviously that goes state by state. There's a lot of moving pieces there, but are notoriously bad capital allocators. And that's kind of why I was saying in the beginning, we should like make this a philanthropic effort. Like task Bill Gates, Elon Musk, Bezos, the greatest CEOs in the world, those who have proven themselves to be competent and highly successful capital allocators. That's literally what's made them into the richest individuals in the world. That's the beauty of capitalism as well. Task them with solving this problem. Instead of taxing the rich, have the rich help you and figure out a way to make things best work. Because ultimately, America is a corporation. It's a massive company. If you think about it, there's like so many moving pieces. It's just a corporation. I don't want to I'm sure you guys understand what I'm saying there. America is one big corporation, and if you get individuals who have proven their abilities and their competency in creating very, very successful corporations, I think that would be very good. So that is kind of my closing thought. Again, you guys, it's just meant to be a fun thought experiment. Please let me know down below what you guys think. In terms of the markets, I don't think I kind of agree that this will have very, very little impact on the markets unless something is actually set in stone, unless something is actually set in motion. But again, as Nassim Taleb, who is behind on Bitcoin, but very correct about what he said, this is a very hot market. We are sitting on dynamite right now. So anything reasonably bad, and again, when we're seeing it, we're seeing the volatility. We're seeing volatility start to spike. Anything like even somewhat bad could pop this bubble at a pretty significant scale. And once it starts to pop, again, because there's so much hot capital, once we really pop, I think we could see a pretty significant pullback. Everything's so overextended, although there's capital flying everywhere, printed out the wazoo. Money printer is still going burr. Again, the market's just been so hot lately. So again, you guys just stay on your toes. We'll close it out with that. And again, I'll catch you downstairs in the comments. So until next time, you guys, always remember, take action, make waves. Peace.